Victoria Fernandez, along with Baldwin Wealth Management's Gina Baldwin. Victoria, I know that you've sort of been in this transitory camp. Also felt that Fed members were sort of committed to this game plan, right? That Jay Powell that he's leading. Yet there are other members, but he's sort of at the head of this thing. And it does feel like they all would try their best to remain accommodative and stick to the game plan. You think that changes tomorrow?
No, I don't think that changes at all, Charles. I think the data that we've received over the past week actually reinforces their view that a lot of this is transitory. Look at CPI, the month-over-month gain. Half of that was due to the auto sector. And we know that a lot of that is supply issues and not enough cars for people to buy. You had another component of it that was more of what we might call the reopening issues with hotels and airlines. It was only a small percentage that was actually what we might think of as true longer-lasting inflation. We know that PPI today, a lot of that had to do with supply chain issues as well, with intermediate goods, with raw materials. So I think it actually reinforces the Fed's view that this is transitory. I'm sure they'll be watching rents. Rents are starting to go up a little bit. That's a stickier component. Wages also. But again, how long are wages going to continue to go up? Remember, inflation is a percent change number, and we're going off of really low base effects. So I think we don't get any new messaging from the Fed tomorrow, except for maybe, as you talked about with Ed, starting to talk about tapering.
So, Gina, your thoughts on that, but also, even if we were to get a tantrum, because I would suspect one is inevitable at some point, whether it's this year, next year, the year after that, or in my lifetime, the Fed, changes course. Do you think investors should ride out any sort of tantrum from Wall Street?
Hi, Charles. Absolutely, they should ride it out. I mean, I think that it's a dangerous game to try to time the market, right? If you take a look at March 2020, when the pandemic hit, we saw a 34% correction and with the biggest snapback we've ever seen in the history of the market. And you mentioned earlier the 2013 taper tantrum. We did have a 6% correction, but the end of the year in 2013 finished up almost 30%. So I would buy on some dips, but I would not try to time this market.
All right, let's go back to this whole growth value thing. Growth was coming on really nicely the last couple of weeks. In fact, before all this data this morning, NASDAQ looked like it was going to have another big day. The tables have turned, at least for today. Markets in a more cautious mode here. Victoria, I know that you've liked some names like Peloton, for instance, and you've also liked some value names. Where would you be most heavily leaning in right now?
So we've always liked those secular growth names, and I think you want to continue to look at some of those names. So whether it's something like an NVIDIA or an Adobe, we like those names, but have some exposure to the cyclical component as well. You do have a reopening trade that's going on, but you can do longer term outlooks from that. We actually just bought Oracle this past week because I think what's happening now is it's no longer an easy trade. You can't just pick any sector and anticipate that they're all going to do well. That fundamental core analysis is going to come back into play, and you need to use that to start being very picky on the names that you choose.
I want to talk about the retail sales number this morning. It missed, but I think it's being mischaracterized in the media. It was actually a big number. In fact, the control group number was huge. That feeds into GDP, which has already gone up at the Atlanta Fed. Gina, you think the consumer remains strong? Should people be tethered in their investments toward a strong U.S. consumer?
Absolutely, Charles. The consumer is 70% of the economy. And regarding retail sales, we think there's more to the story than just the number. We don't see retail sales so much as a decline as it is a shift from online purchases like electronics and furniture to a shift towards experiences like movie theaters and outdoor concerts and travel, and people are going to the gym more. Restaurant sales are up 20% over the past 3 months. So I think even though retail sales were down a bit last month, they were revised upward, and I wouldn't be surprised to see that again.
Great point. And by the way, we got a guest coming on later who's going to love hearing you say that theaters are going to do better as well. Victoria, Gina, thank you both very much. Always appreciate it. Great stuff.